Hi guys, I'm Marty Pospischil and welcome to our March 2021 update. Very excited to be doing this update for you today. Spring is in the air, the flowers are starting to break through the soil, the birds are singing. It's a great time to be alive. So let's jump right into it. Number one, as you recall, as always, one of the metrics I use to track the market is the sales ratio. And the sales ratio basically is the absorption rate every month of different product that sell. And if the sales ratio or the absorption rate is less than 11%, we're in a buyer's market, there's downward pressure on pricing. If we're between 12 and 20%, it is a balanced market. It's not favoring the buyers or the sellers. But if we're greater than 21%, it is a seller's market and there is upward pressure on the pricing. So let's look at our market speedo here. Basically, we've got some really hot activity to show you. We've got the listings are still limited. The market's starved for supply, and that is pushing the demand up. We're actually at a 49% sales ratio this month, which is, again, super heated in our market. You're probably reading about it. You're seeing it out there with all the sold stickers slapping on those signs very quickly. So let's look at exactly what the details are. If you look at our market speed indicator, we're looking at Metro Vancouver for this month. We're looking compared to the previous year, the listings are down. We're at 49.54. The total sales are up to 24.13 compared to 11.45 year over year. And the sale price year over year variance up 17%. Significant changes since last year. So here's my table of activity. I like to summarize everything. The sales activity year over year for detached houses in Metro Vancouver is 79.7%. So 80% increased activity year over year. For townhomes, the activity went up 82% year over year. And for condos, 65.8%. Significant increases in activity. Now, more importantly, let's look at the benchmark price year over year. Since this time last year, houses have come up in Metro Vancouver 13.7%. We'll talk about this briefly, but we're going to see that just this spring. Year over year for attached townhomes and half duplexes, prices have come up 7.2%, and for apartment condos, 2.5%. Now, what happened in the last month? Our benchmark price since last month for houses, 2.8%. Remember, in the beginning of the year, I forecast an increase in pricing of 15% over that 5-month period to the end of spring. We are bang on at 3% increase on our market pricing. So 2.8% for detached houses, 2.9% for townhomes and duplexes, Metro Vancouver, and 2.5% for condos. So across the board, we're getting very close to a 3% benchmark price increase month over month. Very exciting. So what's driving our market? Not a lot has changed for the drivers. Our interest rates are low, 1.6 to 1.8%. We've still got that savings that's pent up. We've got a lot of purchasing taking place now, not just in real estate, but in all sorts of goods, sporting goods, recreational goods. We've got people who have a lot of savings pent up over the year, over 14% on average across Canada. And that is increasing the amount of available funds for real estate as well. Next point, demand for more space. That's still the case. People want more space. They're wanting to go from their ones to their twos, their 2-bedrooms to the townhome or half duplexes, and that crowd's upgrading, of course, to detached housing. So the demand for space is still there. And lastly, the supply is still low. The demand is outpacing the supply of listings coming onto the market. So again, that is a fourth factor that's driving our market. And there's still dramatic upward pressure on pricing. That's still very strong, probably the strongest we've seen over the last year. Now, mortgage rates, again, are forecast to start to increase. There's already been a little bit of that taking place. There's a bit of a creep, but you'll see a little bit more significant trend upward. We'll talk about that more shortly. You can see the home sales, new listings, and housing starts are all up. So activity has gone way past now, apart from housing baseline. And the provincial average price, as I mentioned to you last month, very interesting. Here's the beginning of 2020. We had a really good increase last year until COVID hit. Middle of March shutdown. You can see average price drop, but then a very dramatic increase in average price up until today. And if you look at the whole graph, since the beginning of this graph in 2010, you can see the pandemic is but a mere tooth in the upward trend of average pricing in Greater Vancouver and BC. Average rental rates, this is an interesting graph I found recently, just tracking rental rates over the year. You can see, of course, they dropped as we were in the middle of the pandemic last year. They stabilized in fall. We're seeing an increase in one-bedroom rental rates in Vancouver and Victoria. We've seen the increase. Two-bedroom rates are slightly down in Vancouver. We expect a quick recovery for that as well. So, pandemic, light is at the end of the tunnel. Vaccines rolling out. How is this impacting the housing market and the mortgage rates? Well, mortgage rates are already showing some signs of upward creep, as we forecast earlier. Because of the solid economic recovery, as soon as that starts to get going, those rates are going to start increasing. As we near summer, we can expect the rates to start following a trend upwards. Not significant, but enough that will catch the attention of some buyers and some sellers. So that's the trend in mortgage rates. Housing market for now continues to be extremely hot. It's heating up as the inventory levels remain low. The mortgage rates, as long as they don't spike, the market will continue to heat up. I forecast that to take place throughout all of our spring market, towards the end of the spring market, and then we may see some changes. So housing market for now is continuing to be very, very hot. What are we doing differently? We're doing a whole bunch of things differently to get these kind of results. We had 3 multiple offer situations over the last few days. All of them selling well above asking, just shooting those prices up. We're doing things like, of course, our drone videos around the listings to help people experience what that location is like for all of our listings. We're doing the 3D floor plans. Those are really, really a bonus for people to visualize what that space looks like. And of course, we're doing our live stream broadcast and getting incredible turnouts, people watching our live stream walkthroughs where they're messaging us through Facebook, etc. So being creative, putting our marketing virtually is what me and my associates are doing in our marketplace, and we have to adapt from this new market to make the properties as accessible online as possible before people book private showings, and then of course tracking everybody. It's really been working well and getting some incredible results. So let's talk about specifically in our market what's hot and what's not. If we look again, sales ratio, cutoffs, seller's market below 11, balance 12 to 20, and a seller's market over 21%. So let's look at the specific areas. Detached houses, Vancouver West Side at 22% right now. And you compare that, the last time it was at 22 was in January. Last month it dipped a little bit to 17%, and now it's come back to 22%. You can see the breakdown on the different price bands, quite interesting, but overall, very strong seller's market. Condos and townhomes, Vancouver West Side, we're at 37%. Now this is interesting. You can see how it started to increase over the fall to December. It dropped to 20%. January, we had a spike in activity of 33% for townhomes and condos. And last month at 22, now it's made a significant jump up, Vancouver West Side, condos, townhomes, to 37% sales ratio. And some neighborhoods like Fairview, Kitsilano, over 70% sales ratio. Incredible heated market in those areas for attached strata. Condos and townhomes downtown. Now remember, that was quiet for a while. People were staying a little bit away from the downtown area because of the density, elevators, etc. And we saw that took a while to catch up last year. In January, it jumped into a seller's market, same as last month, but right now it's jumped up to 32%. Significant jump downtown in the attached market. Again, you can freeze the video anytime and look at those different price bands and neighborhoods. Significant activity taking place downtown. Again, getting that spillover from the west side units. We're also seeing that trend from west side now into east side for affordability. So we're seeing the east side really accelerate in pricing. So if you look at detached houses, Vancouver east side, 39% for houses on the east side. That's up from 35% last month. Of course, we had our peak in January, but again, jumped down a little bit last month, and it's right back up at 39%. And you can see the different price bands in the east side. You can see some very interesting sales ratios around the $2 million mark, which you've never seen before, and different neighborhoods faring quite differently over the east side. But overall, very heated, detached market on the east side. Condos and townhomes, Vancouver east side, 49% sales ratio. That is a very, very busy market. Again, that's the hottest the east side condos and townhomes have been since I started tracking this. Last year we were at 27%. It's jumped up 22% to 49% for condos, townhomes on the east side. Incredible, incredible activity for attached strata. So what's happening in the burbs? If we look overall, not surprisingly, the detached monthly variance from last month to the previous, from this month to the previous month, we can see all green bars in the North Shore, throughout central Vancouver, and as we go east to Coquitlam, Port Coquitlam, all the sales ratios are up. So everywhere we have an increase in activity throughout all the burbs. It's not just localized to Vancouver, but it's stretching all over, and that's for detached. If you look at attached, same thing. We've got an incredible increase in activity all throughout the region, significant jumps in activity further out. We are seeing a trend from the west side spillover for affordability into the east side. So the east side's becoming even more overheated than the west side. So that's an interesting thing we're observing now as well. So what's next? Let's look at 2021 as it unfolds. Again, the economy is doing very well. Excellent forecast for this year. That's playing a big role in the spending and the overall activity out there. This is a great graph I showed last month, and it just reinforces my forecast for this year. If you look at the sales ratio, when it's hitting in the 30s, the year-over-year average, if you look at this cluster of data, translates back to about 15 to 20%. We could expect if these sales ratios remain high. So that's a very interesting graph to look at. That's where we're getting these numbers from. And again, I showed you this graph last month. People have a lot of extra disposable income, $75 billion across Canada. The banks are loaning money for very, very cheap. People are buying their condos, they're buying townhomes, they're buying houses, and then we're seeing the upgrade market from the condos to the townhomes to the houses, all the way through, feeding the market, and that seems to be continuing, but even at a more accelerated level for March. Here's we are in the vaccine rollout. We are just past the midpoint of phase 2. Again, light at the end of the tunnel. Spring is in the air. The birds are out singing. The weather's getting a little bit warmer. People are getting more and more excited. That's also adding to the intensity of the market as well. It's time to buy a home, and people are really excited about entering phase 3 and 4 for the vaccine rollout. This is a really interesting graph I got from the CBC showing the cases since COVID began. There was the first phase, and then of course the second phase. You can see it peaking out in January. We had an incredible level of cases across Canada, but you can also see the trend downwards right up to the end of last month. So making significant strides, things looking a lot better with those numbers coming down. That's increasing consumer confidence across Canada and of course right back here in Vancouver. This is showing that savings. I'm just astonished at the amount of money Canadians have saved over last year, $75 billion in their bank accounts, and a lot of them are spending it on new homes and upgrades, etc. So that again is part of the fueling of the market. We're just starting to see those rates start to increase. That's going to play a role in any changes in the market, but for now everybody's spending and consuming. They're very excited about getting out there and spending money. So from a forecasting point of view, just to recap again, BCREA is predicting the activity to increase this year, and that's no surprise. The prices they were anticipating 7.7%. Well, we're actually almost there now. And the CMHC, they're starting to pull back some of their forecasting, but originally they're quoting a 9 to 18% drop in the pricing at some point when that payback period comes. A little bit more stronger forecast. And my forecast, again, I hold to it, and I'm right in line with what's happening. I'm anticipating a 15% increase by the end of spring, but I am also anticipating there will be a correction period that will come. It could be anywhere from 20 to 35%. Just the question is when that's going to hit. So if we look at that, go on to the next slide here, you can see this is what's happening right now. We've got that high percentage, we've got that pent-up buyer demand for space. The economy's booming now. We've got lots of disposable income saved up. The vaccine program is now in full swing in phase 2. The interest rates are still low. So we've got a very, very good market right now. Maybe a good time for a federal election. We'll see. Prices could increase 10 to 15%. I'm sticking more to the higher number now for this spring. But then, of course, what will eventually happen at some point is we may get some changes in our government taxes. The assistant programs will end. Mortgage rates will start to increase at some point, and the sellers will begin to list, and that inventory level will begin to increase. And at that point, the buyers will be reading the market is softening and inventory levels are rising. They'll start to hold back, and prices could start to fall, and they could fall quite significantly. We just don't know exactly when that will happen. I wish I did, but it could be happening anytime over the next 3-4 months up until next year. It's really tough to say exactly. So that's our market forecast in terms of where our market's going. If you have any questions at all, I would love to answer them. Feel free, just pop me an email, marty@pospischilrealty.com. Be happy to answer any questions you have. And also, if you liked my market update, please subscribe to us on YouTube and like us on Facebook. We'd love to notify you when the new market updates come. And as always, I wanted to thank you very much for joining me. I'm Marty Pospischil with Pospischil Realty Group, and that was the March 2021 market update. Thanks for taking the time to watch our video. If you enjoyed this content, please like and share this video, subscribe if you want to see more, and comment your thoughts or questions.